behind. Um, so a rainy day and a dry topic, strategy, but we'll try and make the best use of it. So essentially bulk of my talk is on strategy related to business, but I'll talk of strategy as a field of study and as a field of management. So this is a young field in management. It started out about 40, 50 years back. Essentially, this word strategy comes from the Greek word strategios. And strategios in Greece, I don't know anything else of Greece other than this word, means the art of generalship. And essentially a lot of it has related to being a general in command of armies fighting wars. So that should tell you the genesis of the thought process of this field. Over time it has evolved. We'll look at some of the evolution. And it has evolved into a multidisciplinary field. So typically it pulls in various aspects of finance, marketing, of course strategic management itself, innovations, operations. So typically people get into this field of strategy after, I will not call it a great deal of experience, but after a lot of cross-functional exposure. It has over time pulled in areas of psychology, both individual psychology as well as social psychology. It has brought in fields related to entrepreneurship, and therefore tends to be a very cross-functional field. A strategist needs to have a reasonably good understanding of economics, macroeconomics, and more important, unit economics, microeconomics, what is called, so a cross-functional field which has grown over a period of time. Let's see if this works well. I doubt if I will be able to cover organization design, practically speaking, in the time that we have at hand. How does this work? Oh, that's what I was wondering. Ye alag dikhta hai. Okay. This is a little bit about ourselves. Essentially, we do two things. One is we do knowledge-based consulting for mid-sized corporates, and we work with entrepreneurs for scaling up and their needs for capital. Have you heard of the story of 6 blind men and the elephant? So essentially, the blind men were all feeling the elephant. One felt it was a rope, the other one felt it was a wall, etc. Strategy is a little bit like that. I have personally seen at least 40 definitions, and I'm sure I am not the most widely read person in the world in this field. Huge number of definitions. Everybody talks of it in different ways. We look at it in some ways, but do understand that this is a complex field which can be looked at from different perspectives. Now, if you see the write-up, if it was circulated, we spoke of strategy as a field which also touches on national strategy. We will not spend a lot of time, because all said and done, this is Ahmedabad in Gujarat. People are far more interested in business. This is not New Delhi. But nevertheless, what we look at it as a field, the underlying principles, how they apply at a very large scale. So let's look at the context in which a country operates. So a country has certain objectives. In the case of India, what would be our objective? Poverty alleviation, reducing inequality, etc. From there, it comes up with certain strategies. All this happens in a particular context. Grand strategy, the word grand has nothing grand to do with it. Somebody has attached that word to it. Grand strategy essentially pulls in all these fields for a country to evolve. Is it explicitly stated? The Americans have a fairly explicit grand strategy. In the case of India, it is more implicit. However, our elite, top elite, would have an understanding of what our strategy would be. In the case of in the case of UK, it has been explicitly stated. Can anybody here take a guess at one aspect? Obviously, strategy doesn't have only one leg of it. One aspect of American grand strategy, take a guess what it would be. They're quite explicit about it, nothing hidden. Take a guess, what would be American grand strategy?
To be leader in the world.
Well, we want to be spiritual leaders too. What is wrong in being leaders?
The currency, they peg their
That is an enabler to their strategy. One aspect of American grand strategy which is clearly articulated is not to allow a global level competitor to emerge. So currency and all are tools of which are used. Whether it is right or wrong, we are not getting into that. But Indian grand strategy is somewhat more implicit and arrives. So why are we as business people looking at what's happening at this? So how does the grand strategy comes? It comes, and I want you to think of business as I talk of a country. It comes essentially from a country's drive for power, develops into its intention of gaining more power, comes into, pulls in historical context and current context. Two major stages of strategy formulation and capability development resulting in execution, which pulls in an appreciation of the constraints and imperatives of a country. We all believe that the chap who sits on the president's chair or the prime minister's chair can do enormous number of things. Till you sit in the black chair, you don't realize the constraints which are there. They usually have very few avenues of freedom left to operate in. A lot of the things get determined by the constraints and the imperatives which come. Think about it from a business point of view. You want to grow, strategy formulation, you pull in the context, you pull in your constraints, you pull in what you need to do, and you come up with development. Just to take an example out of interest, so what would be domestic strategy postures? Growth, equality, poverty alleviation. In case of certain countries, stability. The Americans don't have to worry about stability. We have to worry about stability. So these are various things. What are international strategic postures, for those who are interested, are very well expressed through 3 Bs. That a country balances, bandwagons, or it buck passes. What do these 3 mean? Bandwagon means you tie up with a more powerful country and bandwagon with. Example, the Europeans tying up with the Americans for NATO. Think of a joint venture with a smaller partner and a larger partner, more powerful partner. Balancing, India, Pakistan used to be an example. Fortunately, we have now outgrown that. And third one is buck passing. Buck passing means let others take care of this problem. So non-alignment was an example of buck passing. We didn't have to take sides. Somebody else was taking sides. If you are interested in the field, do read what Lee Kuan Yew, the strongman of Singapore, has to say about our non-alignment policy, and what and certain comments which he has passed. Who are the key proponents? The Greek, Thucydides, Ken Morgenthau, who was the US Secretary of Treasury, Bruce Mahon, obviously Henry Kissinger, we have all heard of him in our lives. Coming more to Clausewitz, who was a German general in the 18th century. Sun Tzu, all of you have heard of Sun Tzu? 2000 years back, a Chinese, somebody used to talk of Chinese war fighting strategy. And Kautilya. Kautilya has never really got the fame which he needed to have. Those who are interested in this, we have certain publications on our website. You can look at it. It is not the core theme of what we are talking about, but understand that this field of strategy operates at that level and right down to startup, which is why I brought this. The core underlying principles remain the same. Okay. So now we come to business. As I said, huge number of definitions. Therefore, what is strategy? The definitions which I like are that it is I've specifically put emphasis, it is the determination of long-term goals and objectives, long-term goals, objectives. The adoption of courses of action, keyword adoption. Adoption means what? You have made a choice, you have taken a decision. Action, it is something which has to be implemented. And the allocation of necessary resources. These are keywords which go into strategy. So these, when you think of strategy, it is not a hypothetical field of staring out of the window and thinking. It's essentially these core aspects which must be addressed in any strategy which comes about. So the other key important point, I will not go into the other definition, that it is an integrated keyword, integrated, overarching. A business should have one strategy. It's not that I have a strategy this week and I have a strategy next week. A huge company can have multiple strategies for its different businesses. But a business must have one strategy. And it must be overarching, which means laid across vertically, there should be an understanding of what the strategy is and how to achieve its objectives, right? So that's the definition. Now, who are the key proponents? This is my favorite list. You can write your own list, but I suspect 80% will be the same. Now, as it has evolved over a period of time, this is what is called the analytical school of strategy. For example, SWOT. All of us would have seen what SWOT is about. There are two people that I have marked in red. Michael Porter, 19, is still alive and kicking very much in Harvard Business School. He is has been a grandfather of modern strategic thinking, Michael Porter. In 80s, he did enormous amount of work in this area. Still continues to do. The other one is Henry Mintzberg. If Michael Porter was about the hard aspects of strategy, Henry Mintzberg has done a lot of work on the soft aspects of strategy. So if you don't want to read through this whole list, my recommendation for an interest in this topic would be that you should be familiar with the work of Michael Porter and Henry Mintzberg. So these are core essential people that you should get into. Dr. Rita McGrath has done some good work in transient competitive advantage. We'll look at competitive advantage as we go along. But here is a list of the godfathers. Interesting aspect, how many Indian names are there? Only one. And that too, he used to work in Rice University, I think. C.K. Prahlad. So we as a country and we as businesses are not great in strategic thinking. So you don't have a lot of Indian names here. And for quite some time you won't. To some extent, if you look at international B schools, Harvard would probably be the B school for strategy. Like people say, marketing, Wharton, finance, Columbia. So Harvard would be sort of the B school for strategy. Those who are cynical say that if you're not from Harvard, your work will not get published, which is strictly speaking not true because some of them are not. But these things do happen. So Harvard is the mecca for strategy. So how has this field evolved? Those of you who attended my session on the next decade and its impact on business, which was around 6 months back right here, would have seen this chart. Now I have left this blank. In that session I had put my answer here as to how it will evolve, but I will leave that to you people. So look at how this field has evolved. Let's look at 1970s. What comes to mind in 1970s? What happened in 1973? No, that was 1982. 1973 Arab-Israel war. What happened to price of oil? Shot up. Therefore, what was the drive? Those huge American cars had to come down in size. Efficiency became a driving theme in 1980s. And therefore, that changed how corporate strategy was looked at. 1980s, in late 80s, I used to live in the US. And every day we used to read news that the Japanese are going to beat the Americans hollow. Sony has bought some studio and some property in New York, हो गया, our country is being sold to the Japanese, etc., etc. So certain things emerged out of the Japanese team, which is, this is where Michael Porter came into his own. He brought the concept of competitive advantage. He said this is what the Japanese do very well, the concept of competitive advantage. 1990s, time evolves, the world changed. Your underlying theme was that you had a new set of competitors. The Japanese were no longer the threats that they had looked 10 years back. And this is where C.K. Prahalad and Hamel came up with the aspect of core competency. Understand what has happened. Competitive advantage. What are you talking of? My advantage over you as a competitor. Core competency, what am I talking of? My competency inside, how it is driving my business towards advantage. So these are things which keep moving. Inside out view and outside in view. So then you had C.K. Prahalad and Hamel with the core competency, concept of core competencies. Every management student uses the word core competency. Do ask them what it means, and you'll be surprised at some of the answers which come. Now, as we move into the 2000s, the internet came in a big way. Internet, faster communications, etc. So innovation became again a driving theme. So innovation, process management, how does one manage innovation, has become a driving factor. 2020 plus, what will happen? It will take too long to go through some of those aspects. You can, if you're curious, look at the same way the video which has been put up on, we have tried to answer this theme of 2020, what happens. Sometimes we do it in our workshop, but it requires a lot more time than we have available here. So this is how the field has evolved. Now let's look at the strategy jigsaw. So if you are going to get deeper into this, you need to look, this is not my chart, you will need to look at various aspects. Business level strategy, corporate level strategy. Similarly, international strategy. Now within this, industry level factors and firm specific factors. Whatever I've shown in red, we'll quickly try and touch as we move across. But the entire jigsaw of strategy addresses these areas. Right? So a lot of aspects when you look at any kind of strategy. I will skip this. So points to ponder. What is the difference between business model and strategy? Two very common words used. My strategy is to go to Ahmedabad airport today. And my strategy is I will take this road. What is the difference between business model and strategy? Anybody wants to? On a rainy, wet day, dry, morose subject, so keeping everybody away. Anyone wants to take a shot? Sorry?
To get the maximum revenue.
No, what is the difference between the two?
Business model may be slightly more.
No. In fact, it is the other way around.
Business plan may be changed.
Business model, not business plan.
Model may be changed as per requirement. But strategy not changed. Strategy is something different. Innovative. Business model will be regular, whatever.
No, but then what is regular what they are doing? Okay. Yeah, go ahead.
Model is the objective, and strategy is how to achieve that objective.
No, not necessarily. No.
Model will be a subset of strategy.
No.
Model will be what we are going to do, and strategy will be how we are going to do.
No. As I said, strategy, you should know what, how, who, when, all that has to be answered. This concept of business model started coming in a big way in the early 90s. What happened in early 90s? You started getting computers and laptops. So you had people sitting and making models, revenue, cost, profit, cash flow. I increase my revenue by 10%, I decrease my cost by 5%, what happens? So essentially, sorry?
A kind of simulation.
the ability to do simulations came. So business model is fundamentally profit is equal to revenue minus cost. So therefore, what are the drivers of my revenue and what are the drivers of my cost? And therefore so this is what it is. So business model sort of looks at things vertically, starting from cost up to revenue and profit. Strategy looks at things horizontally. As I said, strategy is about fighting a war. What is the first thing that you think of when you fight a war? Your enemy. So strategy is horizontally about competing. These days, obviously with more computers and other things, they've got combined, but it is important to appreciate this difference. What is the difference between strategy and tactics? Okay, we have a short chart on this we'll look at. Corporate strategy and business strategy we'll look at as we go along. We don't have time for a lot of discussion. Strategic fit we will look at as we go along. So strategy and tactics. Obviously in management usually you don't have a rigid line in anything, unlike in engineering and sciences. So strategy is about long-term objectives, tactics is relatively short-term. You don't have a strategy for what to do over the next month. Those are tactical decisions that a business makes. Similarly, the risk in a strategic decision is far higher. I'm doing entry strategy into a country. Risk is far higher as compared. It's not a tactic. Entering into a new country is not a tactic. Similarly, therefore the business competencies and other things have to change as you look at it. Competition strategy is fundamentally about competition. Tactics need not be about competition. Tactics are day-to-day level things which you look at while implementing. So two key, when we talk of strategic fit, and we'll look at this a little bit later because it's an extremely important concept, two triangles which I would always suggest every businesses to look at is the fit between your company, your customer and competition at strategic level, and at strategic marketing level, your product, your market and your company. So these things, there must be strategic fit between these. So what would be strategic fit? There's little point in my selling Dove soap since I come from HUL. Not much point in my going into a slum and selling Dove soap. Nothing wrong with the slum people. They will not be able to afford it. There's little point in my going to a high-rise building with wealthy people and selling a lot of sachets. They can afford bigger buying packs. So essentially these are the strategic level fits you must look at. These were very simple examples that we were saying. But when you think strategy, you must think strategic fit. We'll look at a framework to think through strategic fit. This is an important framework. A little complex chart, I want you to ignore some of these parts. Fundamentally, we need to spend some time on this. Environment, industry, this is outside a business or outside a company. Strategy and its organization design is inside the company. So the first strategic fit is that this company and its strategy must fit its external environment. You try and do a business in India the American way, it's going to be difficult. Even McDonald's had to customize its menu here, which they normally don't customize anywhere else in the world. So this is the external fit. The strategy and its organization is the internal fit. If you have a certain strategy which evolves over a period of time, your organization design has to support it. You want to be a leader in the world, produce the best quality products, make a Mercedes-Benz cars, what will you need to have? Very strong engineering and R&D capabilities. That is the internal fit. So the internal fit is between strategy and OD, and this is the external. Most of the times, these fits are not thought of and not implemented. Okay? OD itself has certain things to look at. We don't have time to look at OD, but if a lesson that you take out from here is the fact that you must look at strategic fit between the external environment and the company, and within the company between strategy and OD, What do you look for in the environment? There are various things. PRESS stands for political, regulatory, economic, social, and technological. I keep that because I can remember it easily. What is a huge, to give an example, what is a huge impact we have recently seen in regulatory affairs? GST impacted businesses in a big way. Did a business have anything to do with it? No, it came from outside. So it was a macro level impact on business. So you have three levels: macro level, meso level, and company level. So thought process while thinking of strategy must address all three areas. Okay. What are typically the tools which are used? We have all seen SWOT, right? Most of managers have done SWOT sometime in their lives. So SWOT is opportunities and threats are what relates to the external environment. This relates to what is inside. What are the tools as you go in opportunities and threats? Environmental analysis, we looked at PRESS, which is a way, systematic way, though not a complete way of looking at the environment, but it's a systematic way. Analysis of the industry, analysis of competition, and competitive life cycle. You know, all businesses and all industries have life cycles, so competitive life cycle. How do you look at internal strength? Stakeholder analysis. One of the good things of working in an MNC is that whenever you do a project, you have to compulsorily map who are the stakeholders, internal stakeholders, starting from somebody sitting in Asia Pacific and somebody sitting in London to somebody sitting in India. You have to talk to all stakeholders, get what are their perspectives, and essentially work your way forward from there. Capabilities analysis, we'll try and look at this briefly. Portfolio analysis, several of you would have seen the BCG matrix, a very famous portfolio analysis tool. The dog, cow, and a star and a question mark. So that's basically how to shuffle your portfolio of businesses. Strategic maps is nothing but the diagrammatic representations. We are dealing with decision making under uncertainty. This is the analysis. Then comes further analysis to lead you to a decision. How do you test assumptions? Hypothesis testing. Anybody recall hypothesis testing, how it is done in marketing, strategic marketing? Remember in statistics, the T distribution and the F statistic, those are actually used in a hypothesis. You define a null hypothesis that my product, when launched 2 years later, is going to be superior to such and such product, either my own product or competitor's product. That is your hypothesis. And you test that hypothesis collecting data. And you do statistical analysis using the T distribution or modified T distribution and the F statistic. So all the statistics that we learned in college is not wasted to be dumped away. It actually has end use. I have personally not seen implemented game theory. There is a game that we did. Since we are on video, I won't take the names of the company. This was in case of an FMCG product. So company A, its global competitor B, and its major India competitor C. So we did war games on that. So essentially 3 teams were set up. They were told you are going to spend 1 month studying this company as if it comes into your blood. So you study it thoroughly and then you do a war games, and this was about the threat of anticipated market entry by a global major. Now typically game theory, though I have not personally used it, game theory is used a lot for market entry. What it does is, if I am going to enter a particular market, how will my competitor react? So the 2 typical tools which are used are Nash equilibrium and what is called the prisoner's game, prisoner's dilemma. Prisoner's dilemma. When you get a chance, do look at it. John Nash was a Nobel Prize winning mathematician, died I think in a car crash recently. Very famous person. So there is Nash equilibrium and prisoner's dilemma. So entry strategy, game theory. So you play a game and you model this. Scenario planning, informally everybody does that. So it is the scenario of suppose I do A, what will it lead to, versus I do B, what it will lead to. Time, resources, and to an extent intellectual laziness doesn't take the scenario planning right through to its conclusion. You must take it through to its conclusion up to cash flow analysis and PAT, profit after tax. Most of the times it is left out on iffy-feely things. I feel it should be done like that. And value creation, acquisition testing. So essentially, there are ways of testing an acquisition, whether it will give you value or not. So lots of tools which are available to be used. Okay. By and large, all tools, all these things, most strategies fail. Why do they fail? So essentially, if you look at strategy in two parts, the strategy formulation and the strategy execution. So analysis and formulation and its implementation. Most strategies fail in the implementation part. Businesses don't have the patience, don't want to spend the money in systematically implementing them. So most of them fail. Part of them fail in these areas. So a root cause is organizational and managerial inertia in strategy failing. Strategies by themselves are not bad. So where does this inertia come from? So there are fundamentally for managers two types of inertias, cognitive inertia and action inertia. Cognitive is thought process and action inertia is unable to act. One of the most common cognitive inertia is confirmation. In fact, it is the most common managerial inertia comes out of confirmation bias. The more senior and powerful you become, the more susceptible you are to confirmation bias. Confirmation bias means this is the way. Ideology is a very strong example of confirmation bias. Capitalist, communist, this is the. It's a strong example of, you will tend to confirm what you believe in. So confirmation bias is the most common managerial failure in terms of cognitive thinking. Second one is anchoring, but there is and action inertia comes because success becomes a stepping stone to failure. Lot of companies which have been very successful essentially become trapped in their success. They have habits, ways of thinking, they have systems in place which cannot move. So success becomes a stepping stone to failure. Very well known company, early 2000s, used to be a leader in its field, sort of kind of assumed that it will be the leader and ran into serious trouble. Fortunately for them, they recovered well in time. But success is a stepping stone to failure. Remember that when you are looking at your failure. So essentially your values become shackles, your commitments become dogmas. This is the way it should be done. One of the worst things to hear in a company is हमने हमेशा ऐसा ही किया है. You know that this company is shackled in its thinking. Routines, processes become routines, and basically the organization is unable to think out of its box. So how do you get out of confirmation bias? In your team, you should have people who will actually have different thoughts and viewpoints. But then that powerful, strong leader is unable to tolerate within his circle different views which are expressed. So a powerful, strong leader beyond a certain point in time becomes a reason for failure of an organization. Okay. When I was trying to understand this field, I came up with this Hambrick and Patterson, which I thought was a good way of understanding this field. So arena is where you play the game, vehicle is how you go to play it, differentiator is how you differentiate from others, staging is time-wise, how do you stage your activities, economic logic is how you're going to make profits. I added one more. 5 are from Hambrick and Patterson. For who? Because without people, nothing happens. So essentially, there's no address of customers and people in it. So I added for who in this. So for retail, we don't have time to do this. For retail, I have tried to put this down. So what is important in arena? Where do you play? What determines retail? Its location. You want to be where there are a lot of customer footfalls. Similarly, what is the vehicle? Your channel mix. Are you going to go through chemists? Are you going to have intensive distribution? Are you going to have extensive distribution? Are you going to go online? Are you going to go offline? Differentiators. Who has EDLP is everyday low price? Walmart. Good example of that. So you either are a specialized store or you have an assortment, sort of a superstore or an assortment. Are you going to have everyday low price, or you will periodically maintain your price levels and have periodic sales? These are the way you differentiate yourself. Walmart chose to differentiate itself through EDLP. Staging over time, how you expand, particularly true for retail businesses. Many retail businesses don't make money because the same store profitability or same store profits don't turn positive for a long time. This has been a problem with retail industry as it has grown. And for who is the micro segment of customers who will come and address your this. Okay, so how do you go about doing this? The first we looked at was the macro factors. We looked at this, PREST. So when you are doing strategy analysis, first look at macro. Second is industry, which industry you are in. And third is the firm specific factors. So you need to address all three levels. So therefore, let me ask you a question. Good industry, bad business manager, bad industry, good business manager, which one will you prefer? Good obviously everybody will prefer, but good industry, bad manager, bad industry, good manager. Which is preferable? Bad industry, good manager. Okay. Give me an example of a bad industry.
Say aviation.
Aviation, textiles, these days telecom. The brilliant managers sitting up there. What have they been able to do? Virtually nothing. Statistics shows, there is a McKinsey study of 2009 reiterated in 2011 of about 1100 companies, which shows that the good industry, bad manager is a better combination than bad industry, good manager. So where you play is perhaps more important than this. Warren Buffett has the same saying in a different way. He says that when a bad industry meets a good manager, the industry usually wins. So if you are getting into a business, you must get into a good industry, because otherwise you will always be swimming against the tide. So good industry is essential. Now what is good industry? We'll look at something like that. Okay, so three levels. First one, macro, the GSTs and the demonetization impacts, industry and firm in your formulation. Okay, macro factors, we won't have this much time. We'll look at a couple of charts. If you are curious, go to the video. It might be in the AMA library or on our website, where we have looked at macro in last time when I was here in some detail, macro impacts. So what is the, first let us understand the environment strategy relationship. Many people have thought about it, many people have written papers about it. These are eminent scholars, no doubt about it. So these are some of the models which have come up in this. Most common one that you will see across is the 5 forces model. These are both are Michael Porter and Sri C.K. Prahlad's core competency. But both of these relates to environments which are highly predictable. And of course not changeable, but that's a different aspect. What do we know about the environment today? You have heard of the term VUCA? volatile, uncertain, chaotic, ambiguous. The environment is becoming more and more chaotic and unpredictable. Therefore, these models will, or these frameworks will not be sufficed by on their own. There are different people who have come up with different models. So FMCG industry is a classic example of this, highly predictable. FMCG industry is highly predictable. You may not be able to predict quarter on quarter or month on month sales. But everybody knows India's consumption story is there, it will be there for a long time, we are going to grow, etc., etc. If we don't get 7.5% growth rate, we are not going to go below 6. So FMCG is a good example. Pharma is a good example, which is why these industries in stock market jargon, what are they called? Defensive. These are defensive stocks. Because they are based on, for them the environment is highly predictable. Competition is there, but within the competition, players operating in the industry know that the environment is predictable. All of us know that the diabetes market in India is growing by 19% per year. Very lucrative. So 19 becomes 18. You may have more competitors, but it's a big lucrative market. So I can predict fairly well that diabetes medicines will sell. We are the diabetes capital of the world. Okay. So coming to a second factor, and the other thing which, when you leave this room, technology is pressed. The T in press stands for technology. Technology is a huge driving force and is going to become more and more critical as we move along. We have sort of come out of a decade of hibernation of technology, 15 odd years of when technology didn't move much. To a lot of us as consumers who have started using smartphones, etc., this seems counterintuitive. But the core technologies haven't moved much for quite some time. Once I had in the audience, I had a telecom engineer who actually got quite upset. Arey, we have done so much in telecom engineering. You are saying that technology hasn't moved. When did cell phones come? First use of cell phones?
Around 95.
No. Cell phones first came in early 60s. US military. So technology adoption cycle wise, it came into the market much later. When was the first application of the internet? 1964, 65, something like that. DARPA keeps coming up with these projects, military applications. Similarly, when did the internal combustion engine come? When did the internal combustion engine come? All our cars are on the IC engine.
Around 1920.
1920, big commercial application, invention is 1880s odd. When did the jet engine come?
Around 1940.
Yes, in the Second World War, 1944, when the Germans started using it. We are still using jet engines. There have been improvements on that. We are still using IC engines. So fundamentally, the core technologies haven't advanced much. They did move in the 1980s sort of, when computers came in a big way. Now we are facing what is called the fourth industrial revolution. So we are on the advent of the fourth industrial revolution. We don't have time to look at so key lesson here, technology is going to have a big impact over the next 15-20 years. If your business is not ready to adapt to technology, you are going to be left behind. And in technology, it is important that you think about technology in terms of convergence of various technologies. You have lots of technologies coming together. So what is a convergence in terms of basic fields? I remember it as, in my own mind so that I can recite, is BIN plus C. Bio, ICT, nano, and cognitive sciences. The advances in these four are going to come together and impact our personal lives as well as our business lives going forward. So I have tried to map this in terms of strategic impact of businesses and how disruptive it will be And to my surprise, I saw several here. List of, last week I saw an example of 3D printing of carbon fibers. Very few companies have been able to do it. A lot of applications in aerospace. Unusual to get 3D. You know what 3D printing is? I can have a printer and print a bottle out of it. So just imagine how disruptive it can be. Anybody from pharma industry here? So pharmaceuticals are now looking at taking cells, growing cells, printing an artificial liver, using 3D printing, and testing medicines on that. Big change in terms of drug development. Okay. We are running out of time. This is a chart we shared last time, the second impact in terms of economics. So there are some basic economic changes which are coming. We are exiting a 30-year phase of declining interest rates in the world. So now expect that moving forward interest rates will go up. There may be periodic ups and downs, but we are talking of the secular trend which has been like this. It will be like this, going upwards throughout the world. World trade has been ahead of GDP growth for quite some time. Last 2 years, it has been below GDP growth. Last 1 year, it has again come up above world GDP growth, but not as much as it used to be. So globalization, world trade, which everybody thinks of, is that it is on one-way track, is not so. So world trade growth is falling behind. And global growth outlook, we won't have time to look at why. On a sustained long-term basis, global growth is going to be lower than global growth, which used to be earlier. So as a business, when you look at it, when you look at macro factors, these are the things you must keep in mind. This is how things are going to change. So if you are a business which is going to take a lot of long-term debt, keep in mind that interest rates are likely to go up. Okay, we will skip this. So now I talked of industry and this. So let's look at some industry level things and some basic frameworks. First is industry structure. Now I don't have to think much on this. Sri Michael Porter has done all the thinking. As we look at how the basis of strategic competitiveness is changing, all of you have heard of Adam Smith. Adam Smith was a big political economist, macroeconomist in the 1770s, came up with some very fundamental views. So his adaptation was that industry structure will be important. Therefore, to be successful, one must create barriers of entry into an industry. Think of an industry with huge barriers to entry. Defense, because that's largely driven from upstairs, government. Again driven by, no, banking has barriers but not that high. Airlines, very difficult to enter airlines. Banking is an example, but in a country like the US it is not that difficult. In India it has been difficult, but so airlines, good example of an industry where it is difficult to enter and also difficult to exit because you have made all those commitments. Huh? Which one? Well, then it depends on definition of survival there. The second one was David Ricardo, who came about in 1830s, 1840s, I think, where he said that barriers to imitation, again look at it, industry structure is important, is a view external to the firm. Barriers to imitation is a view internal to the firm. I create a barrier to imitation in my work. So that is David Ricardo's. And how do I create a barrier to imitation? My marginal cost must be lower than the marginal cost of my competition. Marginal cost is, so just remember that barriers to imitation. Third one, which Joseph Schumpeter came up with in around 1930s odd, is he's got a very famous phrase, gales of creative destruction, which means that markets are going to get destroyed and new markets will come in their place. Therefore, what becomes important? innovation. So Joseph Schumpeter is sort of the godfather of the concept of innovation. Going forward, we don't know. We'll leave that for the time being as to what becomes important going forward. So this is how the basic of strategic competitiveness has changed over a sustained period of time. We are now talking of 200 years. So how do you look at industry structure? This is Michael Porter's very famous model, 5 forces, that every business is subjected to these 5 forces, potential entrance into the industry, not every business, every industry. This is industry level analysis. And those who can enter the business, obviously buyers, substitutes. For example, steel industry always has the threat of substitution by non-metals. What has happened to the plastic industry in Maharashtra recently? No plastic bags. Substitute, use paper bags. So the whole industry has got impacted by substitutes, and obviously the suppliers to the industry. So when you are looking at, as I said, good industry, bad industry, how do you look at a good industry or bad industry? Here is a way of looking at it. This is a qualitative way. Look at the 5 forces. We have talked of 4 forces. The 5th force is within the industry. How does competition happen within the industry? Some industries compete on cost, intense price rivalry. Some industries compete on differentiation, different way of competing. So this is a structured way of looking at industries. Remember that this was in 1980s. It takes a long time to discuss that, but what is fundamentally missing from this? And not because Michael Porter was dumb, because he came up with this in 1980s. There's something missing in this. A basic thing when you look at industries. What is it? No, that is external. We are talking within industry. What has been happening in pharma industry over the last 10-15 years? Or let's come closer to India. What has been happening in the telecom industry over the last 10 years?
Rapid changes.
No, rapid changes. No. Disruption will be there. What is there? Technology is, we just said technology has not been moving up. But how does that connect with this? Yes, none of you are wrong in what you have said, but how does it connect with this framework? What is the shortfall in this framework? It's not supposed to. It is talking of 5 forces. It is not talking of, it addresses economy of scale and rivalry here.
Suppose we have to answer this question. Like HUL didn't probably anticipate how Patanjali can grow. That kind of blind spot in the strategy. Is it that?
It does. Rivalry. Rivalry. Patanjali came with...
Is unknown rival. Blind spot is the one which is not known.
No, but it is rivalry. It's the job of the strategist to try and anticipate what happens. Otherwise, why do you need strategists? Fundamentally, much at its core level, it is looking at these forces as if they are competing with each other. What has happened in the last 10 years in telecom industry from this standpoint? They are sharing infrastructure, telecom towers, right? What has happened with pharma industry? They are collaborating in basic research. Where does it address the fact that industry may have cooperation, not continuous head-to-head competition? But then 1980s, this was not there. So when you look at these frameworks, an important thing to carry in your mind is that frameworks are extremely useful. But when you use them, understand their limitations. Otherwise, then you end up blaming the framework. So understand its limitations. We won't have time to look at some of these things. Here's a quick thing which once upon a time I did for hospitals, 5 forces. So what happens? What is rivalry among hospitals? India has a huge shortage of hospitals. They don't have to compete that much among themselves. People are brought to the closest hospital most often. So what is the Let's buyer power. How much power, buying power do you have when you have to go to a hospital? Virtually nothing. So buyer power is low. You cannot negotiate much on pricing. Supplier power, low to medium, because these are highly specific requirements that they have. So not very many suppliers are able to supply. So supply power is low. I will not say low to medium. Fairly large number of suppliers. Now, if you are a syringe supplier, where are you? The hospital is going to command the price. Threat of new entrants. Is it easy to build a hospital? Not that easy. What do you need? Lots of doctors. Threat of substitutes. Home care, but how far does home care go? We are running seriously short of time. Another 5-7 minutes, we'll have to wind up. Okay. Right, so that was an example of how to look at an industry. We looked at healthcare delivery as an industry. Okay. Now what happens when we start looking at, this is a good chart which tells you impact of industry. So an outperformer in an attractive, we are going from industry level to firm level. So economy-wide average, industry structure gives you a little bit more profits, your own positioning helps you get more, and therefore you do well in an industry. Whereas even if the industry is good, if you are not good, you are not going to do as well as your rivals. This is a good graphical way of representing it. Quickly coming to firm level factors. When you look at strategy, now we have come to the firm. Remember earlier we looked at macro, meso and firm level. Now in firm level you need to look at 3 levels: corporate strategy, business strategy and functional strategy. What is corporate strategy? Corporate strategy is what business will you get into. Getting into textiles versus getting into airlines is a corporate strategy decision. Going to UK or going to USA is a corporate strategy decision. Business strategy is, once having chosen the corporate strategy, how will you compete in it? So that is business strategy. So essentially, by and large, most businesses need to start from here. So what are the major drivers of your corporate strategy, especially if you're looking at growth? You can grow in existing business, you can expand in new businesses. And in each of these, you can either develop yourself, go for strategic alliances, or you can go for M&A. So M&A is you acquire somebody versus you grow on your own. So fundamentally, innovation and related diversification tend to be, for smaller companies, tend to be the key ways of growth. So you need to, when you're thinking of growing, you need to think through this. How am I going to grow? Is it international expansion? Am I going to go do it myself? Will I have an alliance? Or I'll go acquire a firm? These are extremes of the scale. Okay, so we looked at, that will be confusing. Now we look at the firm. Many of you would have seen this before. This is positional strategy. How does a firm, we looked at industry, now we look at a firm. Broadly, the firm has 2 ways of competing. Either become a cost leader, and I'm not saying low cost, cost leader, or differentiation. Each of these is based on fundamentals of macroeconomics. So a good framework which does things will have its justification coming out of economics. Economics is to business what physics is to engineering. So don't accept a framework unless and until it has sound theoretical concepts. So you must either differentiate yourself or you must be a low cost leader. Don't fall in between 2 stools. This is a basic part of how to compete. Okay, I won't confuse you with this. So where does it impact? If you are differentiated, you will command a higher price, but your costs will be higher. You will have highly paid scientists and engineers. They'll come up with good products which will command a price premium. Mercedes-Benz versus Maruti 800. Both have done well. Low price, low cost. Nano, that car, it's not been successful, so it's not a good example to give. Okay. So essentially cost leadership comes from scale and having very tight management processes. So if you have decided cost leadership, you can't be hands-off kind of manager. Your processes have to be very tight. Whereas if you come from differentiation, it will come from branding. You need to have a lot more innovation built into your business, because that will what will help you this. The point to remember is that each of these, remember I said strategic fit, each of these decisions of competing requires a strategic fit as you go down. You don't have that strategic fit, your strategy will not work. So that strategic fit becomes important. Remember C.K. Prahalad talking of core competence. Core competence relates to your competencies, which is essentially relates to your capabilities. This is not C.K. Prahalad's work, it is, but here is a good way. Let's ignore the bottom part of it. How do you know that your capabilities are going to support your competitive strategy? Is you must run a test on your basic capabilities. They must add value to you and your customer. They should not be easily substitutable. Unique is a slightly esoteric thing, but you have sustainable advantage when your resources are yes, yes, yes. Why is HUL so successful? What are its core competencies? FMCG business. What is core competence of FMCG business? What do you think of when you think of HUL? Branding and distribution. When you think of HUL, what comes to mind? Lux, Lifebuoy, Dove. Huh?
Difficult to imitate at the price point.
No, but that is something which has ended up generating the core competence. We are saying, what is the core competence? Core competence is branding. How does branding come? All these things come into it. So essentially that is when you get a sustainable advantage. More and more in this world, advantages are not sustainable. So you come with what is transient competitive advantage, which means somebody or the other will imitate or acquire the competence which you have. Either he'll go to the internet, he'll outsource, etc., etc. So essential, which is not addressed in those frameworks, is you must have a continuous series of competitive advantages. We are working with a company which is very good at this. You'd be surprised at the technologies that they bring to bear in something which you will think is a very low value added product. Obviously they've learnt it from their MNC, but they keep adapting the technology. They're the world's biggest, internationally they're the world's biggest. So this is going to be difficult to achieve. So you must have transient competitive advantages. So all planning cycles, all strategy planning cycles in all good companies are continuously shrinking. So people have come down to, they don't change strategies, but they come down to reviewing things on a weekly basis, bi-weekly basis, etc. Okay. The other one which I said, company's advantage, system of activities, which is also called value chain. Value chain is when you start with your basic raw material and produce something of value to your customer. So when you start with a basic raw material, what do you start with? Crude oil. What is crude oil? It's a commodity. By definition, what is a commodity? It is not differentiated. So therefore, are you able to get price premium in a commodity? No. So commoditization will take away from you your ability to price. And therefore you play a volume game. In commodities you play a volume game, spot buying, spot selling, etc. So you start from commodities and finally end with a product here. In any business it is extremely important to map your value chain, starting from the basic raw material to what is being delivered to the customer. If you want to analyze any inefficiencies in your business, it is essential to do this. This is written from a manufacturing company standpoint. I've tried to adapt it for sort of today's internet-based companies. This is a platform view which I believe is going to evolve over a period of time. You're looking at a linear horizontal structure. We'll probably more and more end up with economy of knowledge and economy of scale. of a different kind of structure in the value chain, but leave that aside. So you looked at industry, you looked at firm. Firm, you looked at your competitive position. Am I differentiated or am I cost leader? If I'm differentiated, I'm cost leader, do my underlying things give me a strategic fit to deliver that? Having looked at that, I must look at my value chain. Is my value chain tight enough, competitive enough? Okay. And therefore we come to the most difficult part in strategy, which is its implementation. So we use a simple framework. We essentially test the implementation through this. That whether all you have the external fit and the internal fit in place or not. Growth matrix, this is a very famous Ansoff growth matrix. I asked this question today morning also. You can go from existing product, existing market to this. No, nobody actually goes there, but you can go through to a new product, existing market, or existing product, new market. Which one will you choose? Any quick answers? No, green is because my chart making skills are limited. Huh? Why?
You know that this product how it has performed in this market. You can't work it out again. Right in other market it doesn't work well.
Anybody in marketing and sales here?
New product and market development.
Anybody in marketing and sales? How easy it is to tap a new market? Very difficult. There is no single answer to this. There are usually no such clear straight answers. You will go to new products if your new product development capability is strong relative to your competition. You will go to new markets if your marketing capability is strong in relation to competition. So remember that these decisions have to be taken in the light of your own capability vis-a-vis competition. Okay. So when you implement this, be aware of you have defined a business strategy, then define a marketing strategy, then define an operation strategy to support it, then define an innovation strategy to support operations and marketing, financial strategy, and a feedback loop if it does not give you enough returns. But it is not enough to stop here. You have to drill this down through. This is how you get your strategic fit, internal strategic fit. And what are the key elements of value creation? This is called DuPont's formula when you break a result into underlying drivers. ROE is return of equity, this is profit by sales. Your sales margin, sales by assets, how efficiently you are converting your assets into sales. And this is the efficiency of your capital structure. So notice that you have got your sales coming here, you have got your operations coming here, and you have got finance coming here. So the net result is something which comes out of all these things. So these things will change a little bit different depending on the businesses, but by and large, you should look at these aspects. Okay. Implementation step. Set strategic priorities, 5 points into 5 areas of strategic priorities over 3 years. I usually like to say 5 over 5 years, but in India people are not very big long-term thinkers. So 5 over 3 years. Now what are strategic priorities? Here's an example. Company A. Focus on customer needs, be an industry leader, engage our team members, provide a return, look to the future. This is actually strategic priority defined by a company. What do you feel about these priorities? Good, bad, ugly? Very vague. Can you tell which industry it is? This can apply to any industry, any company, in any situation. Very poorly defined. Now I'll show you, and this is a very large company. I'll show you what their competitor defined. Neither of these are huge company, neither of them are ours. So here's the competition which came up with it. Integration of network and operations, fleet modernization, continued incorporation of larger equipment, international capabilities and reservation, continued growth of FA. Can you guess which industry this is now? This is the airlines. This was Southwest Airlines. And I've abbreviated it a little bit. They actually had this more specific, getting Boeing 737-800s, grow that. This was also a little bigger. I don't want to show a chart which FF is frequent flyer program. So look at it, same industry, how vague this is and how sharply defined it is. Now if you're a CEO, what will you do with this? And if you're going to convey this to the rank and file, it is all, these are motherhood statements. So when you define strategic priorities, they must be sharply defined, which people can understand. Okay, then you come up with unit level programs. Instead of 5 points, you'll have more points, but not 3 years. You'll have shorter time frame. The first cut responsibility allocation, developing budgets, annual, quarterly, monthly. And these days with digitization, we have a client where the sales in one branch of Madhya Pradesh can be seen by their global CEO sitting in New York. So these days it is very easy to keep track of some of these things. Roll out, check back on it and go. Continuous process of churning. So this is how you implement strategy, hard work. Most people do not do this. Okay. We'll skip this. We have no time for organization design. In which I'm not surprised. Usually we run out of time. I put this, so what are 7 habits? Why did I come up with 7 habits? Because it's such a famous book. 7 habits of strategic thinkers. So essentially, sense early, have telescope vision, but microscopic detailing. How many people can do both? Very few. Which means you need to have people in your team who can do both. Balanced cognition. Those who follow Zen Buddhism, you know, it's an interesting principle, 5 whys. When you see something you don't understand, either you become a television anchor and hyperventilate. They have answers to all the country's problems in 15-20 minutes. Or you ask 5 whys, why it is so. So what Zen Buddhism says, you ask 5 whys and you get to the root cause of a problem. Ambidexterity, learning. So these are 7 skills that if you want to be a strategic thinker, you must develop. Okay. Summary. A VUCA world at high speed is here, so accept it as normal. Things are going to get more complex at a faster pace. No point in worrying about it. You have to adapt to it as a business. Expect technology and politics to increase turbulence as you move in the future. Boundaries of businesses will become fuzzier. We saw that in FMCG. FMCG and pharma boundaries became fuzzy. Tooth whitening, skin fairness, these kind of products. So boundaries of industries will become fuzzy. Learn to develop an unending series of transient competitive advantages. No competitive advantage is going to last you for 3, 4, 5 years. Organization design as a source of competitive advantage, we have not touched that. Competencies of foresight and ambidexterity, which we have not covered. Go from correlation to causation. What is the difference between correlation and causation? Lot of the times what we see, we end up thinking is causation. Many times it just so happens. The fact that the sun comes up at the time when actually there is a causation there. The fact that the sun comes up at the time, same when TV comes on, because of this thing, it's not caused by it. It just so happened that they are correlated because I've programmed it like that. So learn to differentiate between correlation and causation if you are going to diagnose problems, and build managerial know-how. Okay, that's who we are, which is not relevant. Sorry? Some of them, yes. We are writing a book, so our publisher doesn't like a lot of the sharing, but I hope we covered the key areas. A lot of it we couldn't cover. AMA doesn't give the time, so there is. A lot of it we couldn't cover. But thank you for coming here on a rainy Saturday when you could have been watching a movie somewhere. But thank you for coming, and I hope you have enjoyed the interaction. Those of you who are interested, just pass my business card. You can. Sorry? I was employed till last year. My employer wouldn't allow me to publish books. Now I'm writing 2. So I've published some papers, but so I will publish couple of books as and when I get to it. See, writing is very difficult. Okay. Thank you. If there are no more questions, thanks for your patience.
Each one of you, as you leave from here, has had some learning and some exposure to whatever strategies are, should be, and can be implemented for success. Thank you very much, and I'm sure all of you, wonderful day ahead. Thank you.